Let's talk about all of it now with John Lovallo. He's homebuilders and building product analyst at UBS. Appreciate you being here, John. And
Sure.
a much different and much harder story for the builders than a few years ago when they were trading, let's not forget, at like 4 times earnings. So what happens now? Did the shifting dynamics in the market to a buyer's market help them on the margin at all, or is it just going to be tough into next year?
No, look, actually, we think 2026 is going to be a better year for housing. And I think the underlying building blocks are very much in place. Inventory has been right-sized across most markets. The intent to buy is still very strong. Our survey work would suggest that. Mortgage rates are down, call it 100 basis points since the peak in January. Builder inflation on the input costs is declining or moderating. And we're trading at still 9 times forward earnings. So the setup still feels pretty good. And I think to some of Diana's points, I think what's really important to keep in mind is that home price appreciation since 2019 is up 56%.
Yeah.
There's $35 trillion still of home equity built up in people's homes. So could we have seen a little bit of pullback the past couple of months? Maybe, but we're not concerned about prices falling.
Do you expect prices to keep falling?
No. I think inventory is far too tight. And underlying demand is far too strong.
Why do you think they're falling at all right now? Why do we hear this talk about how it's shifting to more of a buyer's market? Is that just a healthy development because it's been a seller's market for 5 years now, or how do you interpret that?
Well, I think it goes back to the 56% appreciation that we've seen since 2019 as a starting point. However, keep in mind, this is a seasonally very slow time of year for the home builders, but I'm not going to blame it all on that. Consumer confidence is at global financial trough.
It's really bad.
Yeah, it's really bad. So I think, as we move into next year, the building blocks, again, are very much in place for things to work out, but we need confidence to improve. I think we're seeing signs of stabilization there. And if, in fact, just kind of the view of inflation is starting to get a little bit more tame from what we're hearing as well.
Gary Friedman last night on the RH call, I don't know if you caught this, said we're in the 3rd year of the worst housing market in 50 years.
Yeah.
He always has a way of just very he puts a pin on it, and that's what we're living through. And it's actually extraordinary. If you had told someone 3 years ago that this was going to be the case, but that the home builders were going to rip in the meantime, and that early on we understood they have an affordability advantage, they're buying down mortgages and so forth. What do you think allows for them to do better next year? And would you differentiate between them? Would you own them as a group, or are there a couple of standouts?
So I think what has allowed them to perform and what will continue to allow them to perform is one thing what you just said is the ability to buy down rates. They can build smaller footprint homes. They can build a little further away from the city. They can limit, floor plans and elevations, things that make the build process more efficient, right? So they can do things that the existing home market cannot. And I think that, coupled with consumer confidence, will help next year. Now, what I think when we start to see a bit of a bottom, these stocks are going to really rip, and I think they're all going to rip together.
A bottom in what sense?
A bottom in consumer confidence.
Really? So when we start to get better reports, some UMISH or whatever, saying that sentiment is on the rise, that's the time to jump in?
Look, we think so. I think that the stocks are at a valuation right now that is telling us that there's a lot of pessimism out there. And this is a very early cycle type sector. And so when we start to see a bottom in sight and when people believe that margins can sort of bottom out, that is when these stocks are going to take off.